Hello, this is Bill Scheid from the Systems Lab, and we are looking at backtest results for the PRX Intraday System. These results were generated by the PRX crypto strategy on TradingView using the Bitcoin perpetual futures contract on Kraken. This is not a recommendation for this instrument or this exchange. We're presenting this research only for educational and illustrative purposes. So on this chart, we've got a variety of time frames and moving average filters. The first 5 rows in light blue are for 60-minute bars. And each of those light blue rows is a different moving average filter. So we have 250, 2010, and 0. And then we have our net R, our total trades, our reliability, our profit factor, and our expectancy in R. Going down the table, the idea is repeated for each color-coded group of 5 rows, with time frames going from 30 minutes to 15 to 10 and down to 5. Now, a few things that you'll notice. The results are solid across the board, which tells us that the system is robust. As a systems researcher, for me, if I see the opposite, in other words, only one small area of goodness, that tells me that it's probably a function of curve fitting, over optimization, data mining, etc., or it's probably just luck. We're not seeing that here. We're seeing robustness, which I interpret as a good sign for the overall idea behind the system. You'll also notice that, as we would expect, the number of trades increases as we decrease the time frame and increase the length of the moving average filter. Decrease the length of the moving average filter. So you can see total trades is increasing not only from top to bottom, but within each color zone, which is a separate interval. So interestingly, the reliability stays fairly stable at around approximately 31 to 35%, regardless of the configuration. This is a trend following system, and like many trend following systems, the win rate tends to be lower and the win-loss ratio tends to be higher. As Ken Long very astutely pointed out in one of his essays on trading, retail trading tends to attract professionals from the fields of medicine, law, architecture, engineering, etc., etc. In those fields, you get paid to be right. So if you're going to trade this system, you have to be okay with only being right 30 to 40% of the time and still getting paid. As Ken says, it's okay to be wrong, but we just don't stay wrong for long. Then we wait for the times we're right, and when we're right big. So in this data, you'll notice that the net R gain ranges from 125 R to 1,190 R. That's the kind of being wrong you can really enjoy. As a general trend, the expectancy increases as we move towards the higher time frames, and net R increases as we move towards the lower time frames. While the net R numbers at the bottom look really good, I will point out that these numbers do not include slippage or commissions. From our research, we know that systems with low expectancy can lose a material amount or all of their edge once we add in execution costs and slippage. So when considering which flavor we might want to trade, we want to find a balance between opportunity and expectancy while also looking to reduce slippage and commissions as much as possible. Here's the same table, but now we're using the Ethereum perpetual futures contract on Kraken. Again, that's not a recommendation for this instrument or this exchange. The settings are the same, and the data is organized in the same fashion. A few things you'll notice. Again, the results are solid across the board, which tells us the system is robust. The reliability stays fairly stable, around the same range, again, around 34 to 36%. Again, the expectancy increases as we move towards the higher time frames up here at the top, and the net R increases as we move towards the lower time frames. While the net R numbers at the bottom look really good, again, these don't include slippage and commissions, and like I said earlier, We want to find a balance between opportunity and expectancy, keeping in mind that there are strategies out there for reducing slippage and commissions as much as possible. Okay, now you might be thinking, so this looks good for futures, but I live in a place where I can't trade those. So now let's take a look at intraday results for some other crypto instruments. Here's a similar table, but now on the left column, we're looking at a number of different crypto instruments. The last two slides were for crypto futures, but for those of us who live here in the US, access can be restricted on those for regulatory reasons. On this table, each color-coded group of 4 rows is organized by symbol, and we have spot price for Bitcoin, spot price for Ethereum. We have GBTC and ETHE, the crypto ETFs. Then we have 2 popular altcoins, Ripple and Solana. For each symbol, we have 4 intervals. We have 60 minutes, 10 minutes, 5 minutes, and 2 minutes, and that's repeated for each symbol. And for the purposes of simplicity, we've left the MA filter set at 200. Of course, you can season that to taste with the PRX crypto strategy on TradingView and do your own further research. By the way, just as a side note, you can also put in your own slippage and commissions in that software, so you can tweak a lot of the variables and get a very realistic estimate of what your numbers would look like. So the strategy settings are out to the right here again, and I do want to point out that for GBTC and ETHE, there are no EOD exits, no end of day exits. We haven't programmed that into the code yet. So that means on the smaller time frames, the data that we're looking at here do include overnight holds, which produces both huge winners and huge losers. Now, I'm not recommending or advising you hold those ETFs overnight on small time frames. I wouldn't and don't do it myself. I'm just telling you what's in the data you're seeing here for the purposes of full transparency. Of course, the rest of the symbols trade 24/7, so there's no overnight gap there. Now, a few things you'll notice. Again, the results are positive across the board, with the exception of BTC USD on the 2-minute time frame here. This tells us that the system is robust at the symbol level. So the reliability stays fairly stable around the same approximate range that we've been seeing so far. In general, again, the expectancy increases as we move towards higher time frames, and net R increases as we move towards lower time frames. Another thing you'll notice, and it's one of the main takeaways from all the results we're looking at, is that there are a large number of permutations of this system that we can choose to trade. So the options include a variety of trading instruments, time frames, and moving average length. All of these are customizable using the PRX indicator in PRX strategy. So it's very easy to trade a flavor of the PRX crypto system that fits you. And as we know, Van Tharp continually taught it's important to trade a system that fits you. And of course, we don't have to choose just one. Life is good. Jeff and I are currently trading multiple flavors of the PRX crypto system. So you can research for yourself, find a system that works for you, and you don't just have to pick one. Thanks very much for watching.